Hello and welcome to the Ripehouse Property Investment Webinar. Firstly, I'd just like to take the time to thank you for coming and attending. I'm not going to take up too much of your time, probably around an hour, but I do understand you've all got busy schedules, so it's really great to see you all here. Sorry about the beard. I've been flat out lately working on Ripehouse and all the awesome features that I'm really excited to take you through today. I'm not just going to be talking about these features, but I'm really going to be talking about some theoretical aspects and some strategic aspects and property investment in general, and then I'm going to be relating that back to the Ripehouse tools. Ripehouse has been around for a couple of years. I was the founder. I'm an investor for over a decade. I've often tried to look at property from a location point of view and try to understand how location affects the value of individual properties. What is around a property? How do people foresee that and see that? How does that affect their demand? How do they affect or see themselves living in there given what is around it, and how does that translate to dollars? Because dollars are what is important to you. You need to make a good investment right off the bat, and it needs to sustain long-term strong capital gain growth for you to make money in the long term. So it's all about location and exactly how that translates into dollars and value for the purchase, so you can negotiate on an individual purchase, and then it sets that investment up for life. So in the long term, you're going to really be gaining a lot dollars wise and in investment wise and kicking your start just because of the location of that property. So it's going to give you a lot of an awareness about that. So, and that's what Ripehouse is all about. If you're a local living in a suburb, you might know about this, or there's certain circumstances in the suburb that deem one part better than the other. Ripehouse is about helping you gain that local knowledge for every suburb across Australia. So I won't sit here in front of the screen or in front of your faces all the time. I'll put up some slides and I'll take you through some real life practical examples using Ripehouse, but also using some other theoretical and strategic concepts on slides. So yeah, I'll really take you through all those in a lot of detail. And thank you for joining us today. I can't say that enough. And as a special gift, stick around to the end. I've got something to give away, a free report that's going to give you a lot of interesting information. I'll need to get a little bit of details off you to make that personally and one-on-one relevant, but it's going to be some great value for you there. Stick around till the end and get some more details there. But throughout the webinar, please feel free to jump in with any questions you have. I'm on standby to answer those as we're doing things, and I'll have a dedicated question and answer time at the end. So it'll be around an hour. Let's jump right in, and I'm going to start now with some theoretical aspects that are the framework between location and value. Okay, let's jump right in and talk about the central theme of my webinar today, the location of things. Specifically, what do I mean by this? I mean, how does location and the location of a property affects its valuation, the demand for that property, and how that location will affect that demand ongoing into the future, therefore translating to capital gains for you. When I say location, I'm meaning where that property is positioned within the suburb that it's located within, and how close the key amenities are to that property that people living in that suburb need and want. The real core drivers that bring people to that suburb, what they like to be located near, and the key amenities that are important to them. So that obviously is different for every suburb. We need to look at why people move there, the types of people they move there, what part of their life they're in, what stage, what things are going to be important to them. But with all those possible things that are hospitals, schools, transport, parks, libraries, it whittles down to a small number of key amenities that really have a huge and drastic effect on the property's value and demand going forward. Those things, you've probably read these slide in front of me here, are schools, shopping, transport and public housing. 4 key amenities or elements within a suburb that affect the valuation of the property and the demand for that property. The closer it is to these things, or the less public housing that is surrounding a property, the higher the value or the perceived value and the demand for that property. The more people are interested in that property, it appeals to them, the more demand, the higher the valuation of that property, the higher the willingness to pay for that property on an ongoing basis. So these graphs, what they show, I've basically mapped percentage of price compared to the average in the suburb against the distance to these amenities. We can start with schools. 200 metres from the closest school results in the highest possible positive effect on the valuation of a property compared to the suburb average. Basically, if you're right on the doorstep of a school, it might not be a good thing. The school bell ringing, the distraction of cars, the clogging up of the road is a detraction. 200 metres is a sweet spot, and anything after that the price of the property is negatively affected by how far away from a school that it is. One thing to keep in mind, this is an average for every property that's been listed in the last 3 years. In our database, over 3 million properties. We know what it listed, we know a suburb sale average, and we know the difference between the two. Therefore, we can measure those properties and individual properties and how far away they are from these schools, and we can work out how that distance affects the valuation of those properties based on that. We can do that because our data set is so large, and it does span across every suburb in Australia. And we categorise suburb like for like. So inner city suburban suburbs are compared to other inner city suburban suburbs. Remote country towns are compared to other remote country towns, so on and so forth. So over to the top right there, we look at how property's value is affected by its proximity to shopping. Basically, we've got a slight up and down trend up until around 1,200 metres, and then it drops off a cliff. So shopping's an interesting one. Right on the doorstep is okay. Anything over a kilometre, which might be walking distance or a short commute, really does negatively affect the valuation of a property across the whole of Australia. In the actual Ripehouse tools, we have suburb analysis and valuation tools that really do categorise the suburb and why people live there, and we have different wages that we apply based on that suburb. But this is just a really nice snapshot for you to understand these concepts of location and how distance affects the valuation of a property. Transport, right on the doorstep, say right on the bus line, has a great effect, a positive effect on the valuation of a property. Moving out to a kilometre, you've got another peak there, which might be major transport hubs. So a kilometre away from a train station is good, right on the doorstep is not good, and then it does drop off a cliff again after that. Public housing, around the 6% is the average public housing across Australia, just under. That's the average. Anything with a less concentration of public housing around the property results in an above average valuation of that property, right out to over 120% of the average. Anything above that 6%, you can get down to around 80% of the maximum achievable valuation of a property in that suburb if it's surrounded by a lot of public housing. Now, sorry if I've really come through this topic quickly. I haven't finished talking about it, and it's going to gain a lot more relevance when we start analysing suburbs on a map, when we start really looking at the core functionality of Ripehouse, and that really does help you plot location and see how it affects property, and sync that in with your overall strategy or your suburb strategy. So I have skipped through this quickly, and I do speak quickly about this because I do get really passionate about the location of property and how it's affected. You hear the catchphrase location, 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 and nobody really knows what it means. People think they need to be next to a beach or next to the local cinema or next to the most popular restaurant. That's not true. You need the core amenities. You need the distribution and the right clustering of this to really positively affect a property's valuation. Ripehouse does that right in front of your eyes, visually, in a graph that moves across the page, so you can see how each of these does really build on the next and affect the end valuation of the property. So what I'm talking about here, I'm talking about tools that give you the ability to see location, really empower you with that research tool. You can understand how locals would assess that suburb without ever visiting the suburb, or if you are completely familiar with the suburb, you can see how the school that you have always wanted to live next to or you wanted to purchase that property next to really does, in numbers, percentage-wise, affect the valuation of a property. This is all part of the standard Ripehouse monthly subscription. We've structured this at a really accessible quarterly fee, which is priced to encourage your use. It's priced competitively against competitors. We think it's an amazing product. We think it's an excellent price point at $169 per quarter. Unlimited access. We're on hand, basically, and I'll talk about this a little bit later, to be your partner in saving you time, helping you analyse suburbs, helping you match this against your strategy, helping you identify those key properties that are really undervalued based on their location and their condition, and then you can then go from there and negotiate with the agent, knowing in full well that you've got all the information you need about that property, the location, and negotiate based on the real true value of that property. So yeah, these are the Ripehouse tools. I'm going to jump in now and give you a little bit more information about location. But just keep that in mind. This is all part of the Ripehouse subscription. And then as part of that subscription, you have us here on hand to hold your hand and help you use the software and get the most out of it. So I'll move on to the next slide now. Okay, let's jump right in and actually perform some analysis. This is going to be a real life case study. I'm going to be looking at the suburb of Frankston in Victoria, which has long been a favourite of the investor, the working class investor. It's been a great investment class suburb in Victoria. That's why I'm going to choose it. It's got water on one side, it's got some interesting characteristics around the location of it, the geographical location, also public housing and income and rental distributions. It's a really good example that shows all the different things that location, how location can affect the valuation of a property. But then, yeah, Frankston is obviously a darling of the investor, so it might be relevant to you, who knows. So I'm going to be doing a couple of demonstrations on Frankston. I'm going to be loading up our main Ripehouse suburb analysis page with Frankston loaded and doing a basic demo to start with, a quick demo of the functionality, just so you can really understand the page and the dynamics of the page and the different little widgets and tools across the page for you to use. Yeah, then I'm going to jump into more of an advanced demo. I'm going to talk, come at it from two approaches. One of it is where your strategy is already predetermined. You've set your criteria, your property types, your purchase price, you buy and hold, or you renovate to profit, your flipping strategy. You know, that is already set in stone. You're coming into Ripehouse with that defined. You're really finding in suburbs that you choose and you identify as where you want to invest, you can really find the best street or the best location within that suburb that matches that strategy. Or you might have a complete blank slate. You've heard about Frankston, you want to invest there, you've got some advice elsewhere, you're coming into Ripehouse with Frankston locked in, you want to formulate a strategy based on what Frankston offers you as an investor. What are the unique characteristics of Frankston that stand out, that provide the most value, or then sync in most effectively with a strategy to create profit. So they're going to be the two little analysis I'm going to be doing. These are all tools that are part of the subscription model with Ripehouse at $169 per quarter. You get unlimited access to this tool. So yeah, let's get into it. Let's get you up to speed with how to use it. And after this, if you've got any questions, don't hesitate in jumping in and asking the smallest question or the most intricate strategy or theoretical question. I'd love to answer them, and if I can't answer them straight away, I'll get them straight back to you on email afterwards. Okay, so let's get started in the basic analysis example, just so you can really get familiarization with how the suburb analysis page is structured and all the little widgets on there. I'm starting here at the Ripehouse homepage. This is ripehouse.com.au. Here we've got this nice big toolbar at the top here where we can enter in the suburb that we want to analyze, and of course we're going to start typing in Frankston and selecting Frankston from the list there. Once we click on search, it's going to direct us through to the analysis page. This is preloading the suburb into the map. It's defining the suburb area there with the white outline. It's highlighting outside of that suburb area the local government area in a green overlay with a dotted line around it, which you can see down here near the water. I might move Frankston up into the middle of the map so we can just get our bearings a little bit. We can zoom in and out in the same way that you usually can on a map. We can get it nice and positioned in the center there. All the red icons that you see on the map are individual properties. The darker the icon, the more expensive the property based on the suburb average, and the lighter the icon, the cheaper the property is compared to the suburb average. The really white icons that you see there are auction or price withheld properties, but they're still showed there on the map for you to understand and get a grasp of all the properties. Those light to dark are broken into quartile prices, so those colours then relate over here to the icons on the left. So you can really get a quick feel for the price distribution of properties within Frankston. You can see here that 330 is the suburb median for the current sample size of properties on the market. The lower quartile is 282,500 and the upper quartile is 427. So you can basically draw the assumption that the average property is 330k. The Renovator's Delight or original condition properties are around that 280k mark, and the renovated or new properties, this is a blanket simplification, but it does prove to be quite accurate. The renovated properties or the off-the-plan properties are around that 430k mark. It just gives you a really nice little snapshot of the price distribution in the suburb. And there'll be a little bit of information I'll sort of reveal about how you can sync that information into your strategy later on. Down the left-hand side is where I like to get started. You've got some toggles that relate to individual location elements within the suburb, and these toggles generally turn things on and off within the map. So if we start here with public housing, we're turning overlays onto the map. The darker the red, the higher the concentration of public housing. Any overlay that we see on the map, we can hover across and then view the actual value of that potential that figure. So I've picked the darkest here, the highest concentration of public housing. We can see over on the left-hand side here that Frankston, as an average, has 4% public housing. The local government area has 2.8%, and Victoria, as a total, has 2.8%. So this area in the red here must have a lot of public housing, and it has 22% public housing in this particular area. Now, every one of these polygons or shaded overlays on the map relates to around approximately 100 properties, and those are grouped into an area that defines 100 properties, and we've developed the algorithms that create those groups, and then the surrounding areas that we can then plot on a map. And within these groups, we're defining how much public housing is in there, and all the other variables that you'll see shortly. So let's turn public housing off. It gets a little bit confusing if you add multiple layers on at the one time. What we're seeing now is owner-occupier versus rental. So we've split the average. The average in this suburb is 35.9%. Anything that's below the average, as far as more so less rentals than 35.9%, will be in the green shading. So a stronger proportion of owner-occupiers. Anything above 35.9% of rentals is stronger proportion of rentals compared to the suburb average, and that's highlighted in yellow. Once again, the darker the yellow, the higher the concentration of rentals. The darker the green, the higher the concentration of owner-occupiers in that particular zone. Rent's another interesting one. Anything you see here in the purple is above average rent. So in these areas, you could achieve, or the average achievable rent is higher than the average. The darker the purple, the higher the rent. Similarly, the darker the purple here, the higher the incomes. Now this is something that is, all of these things I can safely say are unique to Ripehouse. You won't see these things anywhere else, especially visibly on a map like this. This is particularly unique to Ripehouse. These are investment hotspots that you can cycle on and off the map. It's basically showing you where, over the last 12 months, there's been stronger, sustained, high-price pockets of property within this suburb. So in Frankston, we've got a strong, high-price area of property around the water, around the beach. These might have water views, and you would expect higher-price pockets of property, and these are defined as blue overlays on the map. The stronger the blue, the higher the price compared to the average in the suburb. Now let's bear in mind that these are not slightly above average. These are higher price clusters, sustained higher price clusters, surrounded by other higher price clusters, moving towards a peak. So some suburbs don't have, or have a very even distribution of property price, or it's a random, or it's seemingly attached to public housing, so there's no definable cluster and peak. This might be a mountain if you're looking at height, and it doesn't just suddenly appear out of a cliff. It's a gentle slope up towards a peak. So we can see on here the peak, and that's in the blue, and the trough is in the green, and that's a cold zone, which is a sustained lower price pocket of property. Now, there's none existing in Frankston at the moment, but we also have investment hotspots called gentrification zones, and these are pockets of property within the suburb that are going up faster than the suburb average. So if Frankston, as an example, is going up at 10% per annum, these gentrification zones are going up faster than 10%. And this is sustained over 12 months. So you've got a trend there, and anything above that 10% is going to be highlighted as an orange overlay on the map. So Frankston, what you can draw from that conclusion is going up without any gentrification overlays, is going up in value at quite a steady rate across the whole board, and that's over the 12 months. I can just switch on now amenities into the suburb. So this is going to give you a really quick snapshot. Each icon on the map there relates to a traffic, shop or schools element. You can see there's lots of bus routes through Frankston coming down the main Cranbourne Road towards the shopping district, which is down here towards the water. We can see all the shopping elements. As an example, we can see a school down here. So they're all marked on the map there for you to get a really good feel of what's in the suburb. And then obviously every property on the market is mapped to the closest of those elements to work out the valuation of that property. Just a quick summary form. I've got the crime information I've plotted and had our data team plot crime for every suburb in Australia and how that relates to the local government area and the state around it. So Frankston, in regards to crime compared to its suburbs surrounding it and to Victoria as a large, has a very high crime rate. So that's something that needs to be taken into consideration and might not fit your risk profile. That might then be offset, or you might receive a double whammy if you're in a high percentage of public housing within Frankston. It's something to consider, but it's all there. The information is all there. Down here on the right, so once we've sort of got a really good feel of the suburb and how it's comprised, we've looked at the overlays. We can leave them on and off. We want to look at the individual properties. Now we can click on an individual property icon, and that's going to display over the top right here the basic property details and the listing revision history. So Ripehouse shows you the first day that it popped on the market, the first listing, every subsequent relisting or price amendment by the agent. If it's gone from auction to fixed price to auction, that's all captured, every single update of the property across the major property portals in Australia. So we were a property search aggregator. We bring it all together, we show you the property, and we give you the links back to the original source so you can then proceed with further information and your due diligence with the agent. So we're bringing all that together the same way that Google finds property listings. We're bringing that together and showing you the full listing history so you can see how it's been discounted and you can use that in your negotiation. This property's only been on the market for 10 days and was originally listed at $360. It hasn't been revised. Let's now divert our attention to the bottom right-hand corner where we have a list of all the properties in Frankston in a table format. We can sort this table, very importantly, by price, by discount amount. So based on that listing history, we can view this property at the top of the list has been discounted 9%. We can click the more information button and that's going to show us the full listing history of that property. Started off on the market at 500k on the 19th of December. It was revised down to 450k 37 days ago, which is a 9% discount. We can see that full listing revision history and we can sort by discounted amount if that matches your strategy. We can also see the days on market for individual properties and we can sort by that. So if we want to target properties that have been on the market for a long time, that's stale stock, we can start there, or we can target the fresh stock that's been on the market for the minimum amount of time. So yeah, we can click on the icons. We can find properties that are sitting in certain locations. This property is sitting in a high percentage of public housing, and then we can filter properties. So we only want to show 2-bedroom properties on the map. We might only want to show properties located in, for example, a blue chip zone, or properties located by no public housing, 0% public housing, or you're happy to accept the maximum potential of public housing in the area. You can then also similarly define how much rental density is surrounding the area. Do you want it to be above average rental density or below average? You can select exactly the minimum constraint of rental density that you're willing to accept in your purchase. And then you're obviously able to select the property class or the property type to really fine-tune your search there. I won't execute that search. I don't really want to take any of these properties off the map just for my example. But this one that I've selected is in public housing. This is the next step. You want to see how that location of that property affects its valuation. So let's click on the price valuation button and that's going to get a pop-up in front of us now, which is very visual in the way that it represents what's happening. You can see how one element flows into the next and you can see how at the other end it spits out a final valuation for the property. So this is a 5-bedroom house which might fall out of the range of larger sample size, so we might be having some outliers in the mix here, but based on the sample size and what data we have available, we've determined the average property 5-bedroom house within Frankston has a starting valuation of $430,000. This particular property is not located in any investment hotspot zone, as I talked about before, the blue chip cold zone gentrification. So that's not affecting the valuation. It's 820 metres away from a school, so based on the type of suburb that Frankston is, that has a negative 2% adjustment on the valuation. It's quite away from shopping, 1400 metres, negative 5%, but it is very close to public transport, so the bus route, getting them into that transport, into the shopping hub or to the amenities or to the unis is only 157 metres away to that transport hub. So that's a great 2% positive effect on the valuation of property, but this property is in the 14% concentration of public housing, which on the Frankston example is on the high side and has a negative 1.7% effect on the valuation of this particular property. So all those things, it spits out a final valuation of $401,000. So the asking price for this property is $550,000. It hasn't been revised downwards. It hasn't been discounted. There's a big difference between those two numbers, and we can tweak. So based on your assessment of the condition of this property, viewing the photos and talking with the agent, is it been renovated? Is it in renovators delight condition? You can really set, is it below average, average, or above average? If you deem it's above average condition, the set comparable sales price is $460,000, runs through the same filters and spits out $429,000. So this property must be extremely nice, or the agent is setting a very overly ambitious first listing price for the property. So how do we get this comparable sales valuation? We've got all the comparable listings down here below. It's found 4 that are directly comparable within Frankston, and these are the values for them. You can then click through and view the actual original listing, and these help you really assess the condition of this property and the comparable condition. And that's giving you a really good summary of all the features of the analysis page here. You can see how they link into each other, and they take you on a journey of understanding the suburb, the dynamics within the suburb, and then how you can filter, shortlist, sort properties. And then once you've selected some few properties, you can get a grasp of the discounting of that property and how that affects the valuation of the property. All those things, how they affect the valuation of the property. That's the features of the page. Let's start talking a little bit about an advanced suburb analysis. Really looking at the two-pronged approach, starting with a predefined strategy. You're coming to this suburb with a predefined strategy. You've done this before, you've learned about it, you really want to try this. How do you apply that strategy to this suburb and find the best pockets to invest in within this suburb or to purchase in within this suburb that suit your strategy? Or on the flip side, no strategy. Anything's on the table. You want to work out the best investment zones in Frankston and then sync those with a strategy that's appropriate. So I might start off looking at the first approach. You've predefined a strategy, and then we're going to go from there. So I'll leave the map here open, and we'll start our analysis. So leaving the map there, let's pretend we're starting from scratch. We're going back to an advanced analysis of Frankston. This is one where we're going to start with a predefined strategy. There's a huge multitude of different strategies that you could be employing. That's a whole separate webinar and a whole separate education stream. But that's obviously synced to your place as an investor, your place in the lifestyle of an investor, and all of your personal risk profiles. But the multitude of cash flow positive, negatively gearing, off the plan, buy and hold, buy to flip, buy to renovate to flip, subdivision potential, corner blocks, dropping a house on the back. There's so many different options out there. There's so many different investment strategies. If you're coming to Ripehouse with a predefined strategy, you've done this before, you want to find the best location within your selected suburb to apply your strategy. This is how you can do it. So today I'm going to employ the buy and flip strategy within Frankston. It's a really popular strategy at the moment. People it has been for at least 5 years with all the renovation shows. People love to get in there and renovate. They love to add value. We all know renovation is a great way of manufacturing capital gains in a property. All the justifications for the strategy aside, let's say we're adopting a renovate and a flip strategy within Frankston. Where do we want to invest? Where's the best place to invest within Frankston? We need to know this very accurately, because if we buy the wrong class of property or the wrong location in Frankston, we're not going to attract that premium price after we've renovated the property that we would. If it's sitting in the I'll go into a lot of detail about the individual metrics, but if we, for example, buy in a high rental area, a very high rental area, and we are renovating a property to be appealing to families that are going to be moving in there as owner-occupiers, you've just really gone completely on a tangent. You're not going to be appealing to the demand of the suburb and the real intricacies of Frankston, and you're not going to get that premium price that you're trying to achieve. You're not going to be matching the property with the demand, and that mismatch is going to cost you money. So Ripehouse is about saving you money and helping you save time and helping you be very effective with how you analyse a suburb. That's what it's all about. That's what the subscription fee buys you a license to use the software. Obviously, it buys you these tools and the unlimited use of these tools to save you money. So let's look at Frankston from a buy, renovate, and flip strategy. I would say I want to be just on the surface away from public housing with this strategy. I want to have a nice, stable street appeal, mix of people moving in and out of the street and the tenants. I'd like to have a nice, stable street. So I really want to be having no public housing around the property. So we can already rule out all these places highlighted in the red. I want to have a lot of owner-occupiers. So this high rental concentrations is really not going to be conducive to a good buy and hold strategy. So anything with the green, away from the yellow, and obviously away from the red is great. Now, I'm not so worried about high rent achieved because, yeah, that's not really part of my strategy. It's down the track, the high rental achieved. People are going to be living there to love the property, love the renovation, to really pay that premium. They're wanting to enjoy that. They're not wanting to rent it out. So the higher rent is not really going to sink into our strategy, but it's not also going to detract from it either. So let's just ignore rents altogether. And similarly, incomes. Incomes might help a little bit to demonstrate where the professionals live in Frankston, where the higher incomes earners live, and people generally might be drawn to that if they're looking to purchase a premium property. So let's leave purple on the map. That can really help. So we're wanting to target the darker purple areas. Ripehouse has really quickly narrowed us down to this area around here. We've got the higher incomes, we've got the strong owner-occupier focus, and we've got the minimum amounts of public housing. It's really probably these pockets here, these ones down here, that we really want to focus on. So with that in mind, there's not much stock on the market. As part of a buy and flip strategy, you want to be buying the average or renovators to light condition properties. You want to be buying down the lower quartile or the median quartile and driving the value of that property up towards the upper quartile. And the difference between these quartiles at a starting point is your value add. You don't want to be overcapitalizing, but you've got the potential, if you move a property from the lower to the upper quartile, of making 150k just on the surface within Frankston. Obviously, based on the location of all these things here, of these properties, they are generally, because of the types of property and the class of these properties and what we've defined as around these properties, they might generally all be above median in price. So we need to keep that in mind, but we can do some analysis on the valuation of these properties, which is going to confirm that or disprove it. The other alternative might have been going for the blue chip zones up here near the water, but what's sort of standing out to me is the very strong density of rentals. So these might be off the plan or new development type properties that offer little scope for renovation. Yeah, just when I sort of see the blue chip zones overlaid with high rental areas, that's what I immediately think, especially considering that we've got lots of shopping and in the area. So, you'd think these would be the Westfield type developments with lots of new stock on the market, which is driving up that blue chip zone. But you've also got a huge amount of rentals, so that's what would stand out. This seems to be the more established area of Frankston, with the families moving in, the professional couples wanting that nicely renovated property. So that suits your strategy there. Yeah, so the people that are moving in might have kids. Proximity to schools will be great. Proximity to transport that would generally get people into the shops might be less important because they do have an established house with garage room and a car. So I'd be sort of willing to sacrifice the proximity to transport and shopping in exchange for nice close walking distance to schools. So it is conducive over in this pocket of Frankston to that strategy and to those criteria based on who's going to be moving in. So we really have narrowed it down to this area around here. Let's start looking at the individual properties that fall into it, and we can get a really good grasp of the value of those properties. So this one's 470k for 3-bedroom, 550 for a 5-bedroom, 430 for a 4-bedroom, 360 for a 3-bedroom. These are all great. These are all premium prices for these properties, but how do we know how that compares to the rest of Frankston? We need to remove all the noise, all the other properties that fall in locations that don't satisfy our criteria, and then based on that new sample set of only locations that satisfy our criteria, we've got a new quartile pricing set. We know the profit margin that we can potentially make, and then we start finding those individual properties. So based on the suburb average, we want families moving in. I'm going to say 3-bedroom houses with any number of bathrooms and any number of car spaces. I won't touch the minimum price range. We've already established it doesn't need to belong in a blue chip gentrification or cold zone based on what's in the suburb, but we want very low public housing. So I'm only accepting less than the suburb average of around 5%. And we're happy to accept a very low amount of rental density. So we're happy to include all those owner-occupier houses in the mix. We don't want apartments or duplexes or terraces or townhouses or semi-detached. We've got our filter. Let's apply it. Now we've got 13 properties that are left in the mix. These couple that were over around here have probably just been sorted out based on the public housing. So we might want to see what public housing is in this area. 5%. Yeah, and let's just move our mix in just so we can get those properties in the mix, because I think they would still suit us. So we might go 6% there and apply that filter. Now we've got the 21 properties in the mix. We've got a couple more in here and a couple more in over here next to this school. So that's another nice little zone. Based on this new criteria, we can see how that affects the quartile pricing. So it has tightened towards that band. Suburb median has increased slightly, 345. The band has tightened. So we've got an 85k difference between the lower and upper quartile. So you've got that potential for profit. You know, that's a 25% profit margin. You don't want to be overcapitalising because that band is quite tight. But we can see these properties are now falling into that strategy, and we can start looking at the revision history. 289k this north area, 345. I'm really interested around this zone down here. So even though there might be not one on the market at the moment, Ripehouse gives you some great tools to come back and check every day. When a property does pop onto the market in this zone, it will highlight it and demonstrate and show you, and then you can perform the valuation on that property and jump on it if it is undervalued. This one might be. It's just over the suburb median. This is a premium pocket of Frankston from my assessment. Sorry, I just jumped around then. I might start wanting to get an assessment of the condition of this property, the price point, and start doing my due diligence around the individual property listings. Now I've got a short list. So let's view the actual original listing for this property. You can tell here, yes, it's in new condition. Probably not much room for improvement, so it's not going to suit our strategy. Let's skip back and we'll view another property. The one next door, potentially. This one's at 470k, so that's way above the median. I expect this to be in very good condition. Price negotiation over 470. It does look like it's nice and new. Very good condition with good appointments. So that's basically the maximum achievable in Frankston. And now, I've just clicked on the overlay. What about this one up here? It's a little bit lighter in colour, so we can tell it's a little bit less expensive. 320, so that's sitting just under the median value towards the lower quartile, so it's giving us good scope for improvement and renovation. Let's click to view. So yeah, just on the surface, does look pretty rough. But that's good with our flipping strategy. We want to add lots of value through the renovation, get some nice street appeal, nice internal facilities, and let's get some demand. This property fits the bill. The price point is right. It might offer some scope to negotiate down to that lower quartile value of around 310k, but it offers a really good example of how we've narrowed down particular zones within Frankston that suit your particular strategy or profile, and now we're clicking through individual properties, syncing them in with the quartile pricing. You can perform the valuations on them using our tool that I've demonstrated before, but we're going into the original listing that's on the market. We've seen the full listing history to negotiate with, and we know what this value and the property is worth and how much room there is for improvement with this particular strategy up to a renovated state. So that's our profit margin. We can define it. I've basically gone through this full advanced analysis now using a defined strategy. Let's have a quick going through. I know I'm taking up quite a lot of time with this, and it is quite detailed and advanced, and you might want to go back through it again later. I will send you a link to the webinar so you can review it and send it on to your friends and sort of sit and think about it. But I do obviously recommend jumping in and talking to me about the tool. It is at that price point that is a great price point for you to ease you into looking at property in this way. It's a flexible price point, and it's something that you can cancel after 3 months. If you've selected a property, you don't need to keep paying on a yearly subscription. If you've selected a property, you can move off it, and next time you're in the market, we would love to have you back and use Ripehouse again. But yeah, the $169 price point is very flexible. It does offer you unlimited subscription to Ripehouse. And as a special offer, as part of the attendance of this webinar, wait around to the end, because I'd love to offer you a special offer in regards to that subscription. So do stay, and I'll talk a little bit more about that later. But for now, let's look at Frankston and how the dynamic of Frankston is comprised. Ask ourselves some questions, the questions that you should be asking, the questions that I ask when I'm looking for investment properties. What constitutes the key drivers within the suburb, and how can you use that to your advantage if Frankston is somewhere that you've determined you need to invest? Let's look for the best and optimum strategy for Frankston. So I've just refreshed the page here on Frankston. I've just taken off all the previous filters and toggles, so we've got back to a previous state, because now I'm going through with my second part of the advanced analysis of Frankston, and this is you're coming to Frankston, you've got no predefined strategy, you want to really look at what Frankston has got to offer, the potential for the optimum investment strategy for Frankston, and really adapting to the circumstance to formulate that strategy, and you're going from there. So it might be your cup of tea doing it this way, it might not be, but it's just another really good example of how you can use the tools and how different things mean certain things to the value and demand of a property. To do this, I'm going to be asking a lot of questions that you generally might be asking yourself. I'm trying to put myself in your shoes and relate to how you'd be needing to use these tools and the questions you need to get answered. So I'll work down the toggles down the left. I'll look at different converse and positive and negative scenarios for what I see on the map, and we can see and brainstorm how different strategies might suit what we're seeing on the map. I won't go into too much detail, I'll skip through it. It is really nice and valuable. This is really key to the little special offer I've got as part of you attending the webinar today. I will let you know of the secret. As part of the $169 3-month subscription, because you've taken the time to watch the webinar today, and I really do appreciate it. I hope you've got some valuable information. But I really want you to get the most out of the tools if you do choose to subscribe today. So if you do choose to register today following the webinar, I'll take the time within the first month of your membership, after you've got familiar or right off the bat, it's up to you, to have a 30-minute one-on-one session where I can use the tools. I get a little bit of details from you before the session, so I'm not wasting your time, and we really do get a 30-minute chunk looking at your situation, your strategy, all the different influences that have gotten to you this point. We can shortlist some suburbs. We can look at the KPIs to shortlist those suburbs, and you really get you a nice short list of suburbs that you want to be targeting, or you come to me with those suburbs. I can do some analysis before we get into that 30 minutes, so we can really get down to the nitty-gritty, and then I'm going to sit and configure the tools to best suit your needs, so you're getting the most out of it. That's something that's going to be free and as part of included in that 3-month subscription price, if you do register as part of this webinar. So there is a time limit associated with that. More details on that later. Let's jump back in. Turn on the public housing overlays. The darker areas of public housing, once again, obviously show strong clusters of public housing. Where there's no red, there's below average public housing. So this gives two things. Do we want to seek out or avoid public housing? Sometimes you find strong clusters of public housing that are represented by lower than average property prices, which is usually obviously what I've demonstrated is the relationship. This might be something you want to seek out because lower than average property prices generally means higher yields. So if you can find an area with high public housing, high rents and lower values, we might be having excellent yields. And what that means is because you're buying at that low point, buy low, sell high, there's a lot of scope there for growth towards that suburb median if you're providing some value adds to that property, if it's in the most demand asset class within Frankston. You might be setting yourself up there buying low, high rental yields with capital growth in the future if the public housing area is improving. An example that's way off topic that I love to go back to, and somewhere that I've bought recently is Dubbo. Dubbo had the highest concentration and worst, typically widely regarded as the worst public housing zone or cluster in New South Wales. It was way off towards the airport in Dubbo, northwest area, completely segregated, huge amount of public housing, terrible crime rate. There was no owner occupiers in the area, so the value of the property was very low. The government enacted a 3-year owner-occupier buyback scheme. Gradually, you had people buying their houses, living in them, having to live in it for 3 years, taking pride in their properties, putting a front fence up, really looking after the places. And then as those people, after 3 years, were able to sell those properties, they were on to move on to different areas or so on and so forth. The average of that area, which started off at a very low point, suddenly increased very quickly. You had empty blocks being bought and new houses being built. You had properties now being on-sold for the second time from the owner-occupier clause. Very quickly did that previously high public housing concentration gentrify towards the suburb mean, and now is one of the this particular pocket in Dubbo is not even anywhere close to the worst sections of Dubbo. It's actually quite nice. You've got new properties going up. You've got an excellent community feel, and a really nice place to live. So it's just an example of buying low. If something's sort of moving through public housing, you can avoid it or you can seek it out. I'll just flip on rents. If you've got areas with high rents achievable around high public housing, that means there's high rental demand or high rents achieved in the area. Flipped over with nice yellow bands, that might be an avoid or seek out. It might be a seek out scenario. Buying low in this area, high public housing, but you've also got high rents achievable in the area after it moves through a gentrification process, and you've got high rental demand in the area. That's a nice combo. That's something you could really sort of adjust your strategy to focus on in Frankston. Just as an example, you might be looking at owner-occupied versus rental only in Frankston. You've got a really strong cluster of rentals over here, and you've got a nice band of owner-occupier only towards the south of Frankston. If you've got a really nice cluster or peak of owner-occupiers, it suits yourself really well to a buy and flip strategy. If you've got an area that ties in with really high rental percentage amounts with high rents achieved, it might suit itself to a negatively gearing off the plan type strategy, buy and hold for rental return type strategy. Nothing's really standing out of it to us here though in Frankston. Rents and incomes. If you can find areas with high rental return, high yields, low vacancy rates, lots of demand is one thing. If you can find high rents backed up with high incomes, they're obviously there for a reason. That might then lend itself into, again, those buy, renovate and flip to the owner-occupier scenarios that we talked about in the basic or in the first analysis. I'll turn these off and move on to the investment hotspots. There's nothing on the map here, but a gentrification strategy, you might be finding a gentrification zone in the suburb, which, as I mentioned before, is an area in Frankston that's going up faster than anywhere else. You might want to jump on the bandwagon. You might want to really exploit that above average growth now, which is generally represents what's going to happen in the future. So that might be a new shopping centre, a new school, a new transport facility to the city has gone in. It's generated a gentrification zone in the last 12 months. You might want to jump on that. Yeah, these are some examples. We can devise these strategies, and then we can locate properties that match those strategies, and we can then filter those properties based on that strategy. And then we really assess the price points and the individual properties, and then we start tracking those properties that fall into those areas and shortlisting them on an ongoing basis. Yeah, I've gone through that in the previous example. I've really just shown you there how you can use the toggles to really identify a strategy that best suits what is on offer in Frankston. These are all things that you can do for every suburb across Australia at any time on an unlimited basis as part of your subscription. So let's jump in. I'll just do a bit of a summary about how Ripehouse can suit you day to day, and I might just jump now into the Ripehouse dashboard, which is another tool that allows you to find discounted property and shortlist those properties and suburbs that you've identified that you want to track. Okay, so the page that's loading here now is the My Dashboard page. This is a page that you can use as your daily destination to Ripehouse. It's a dashboard where you can configure individual widgets that suit your configuration and your preferences, and it's remembered every day. So you can check back. A widget might be a property feed, so it's tracking individual properties as they come onto the market. It's ranking those properties against the other suburbs that you've got on your shortlist, and then you can quickly click on those individual properties and be taken into the suburb analysis page. As you've seen the suburb analysis performed on the map, you can view that shortlisted property on that map and put it in context with what's around it. So this is your daily starting point or your daily touching point, I suppose. The suburb map is really where all the power is, as I demonstrated. This is just your administration tool to save you a little bit of time. A number of concepts. You've got 5 widgets down the side here on the right. You can drag any of these icons over onto the 3 columns in the middle, and it will initialize that widget with no configuration set. And then you actually go in and you configure that widget. I've got a property feed, for example. I've just hidden that or removed it. You can drag them across like I'm just doing so here. This is a standard property feed. It's tracking all the properties that are hitting the market. You can add individual suburbs. So what are we tracking here? Frankston, Victoria, at the suburb. It's going away finding the current properties for listing in Frankston. Everything that's on the market, it's ranked them based on price, location, and all the variables that I've spoken about in the previous suburb map analysis, and it's got the cream of the crop there in order for you there. So the real power, I won't go into too much detail on this, there's a lot of power in this shortlisting tool. You can click on any of these properties and be taken through to the main suburb analysis. You can see the asking price and the estimated value is there quickly for you, and a lot of information about how this is calculated. So the real beauty about this tool, and this is why I'm skipping through, is you can compare like for like, suburb across suburb. So what I'm saying there is just because something in Frankston doesn't necessarily mean it's a better investment than another suburb. If you're looking at 2 suburbs, you can compare and shortlist properties on the one feed there, and they will be ranked against each other using the same variables. You can obviously here I've got filters where you can filter the properties that are returned, and only a subset based on price ranges is returned, or property class, so only units or houses. Let's just look at another one, say Toorak. So a completely different type of suburb in Victoria. It's going to rank properties against other properties in Toorak and properties in Frankston against other properties in Frankston, and they're going to be compared like for like. So based on the new sample size, we'll revise the rankings for Frankston, comparing like for like. Frankston's still topping the list as far as investment candidates are concerned. There's really not many Tooraks featuring in comparison. Actually none. What it's actually showing here is the top 20 properties that it finds, and Frankston is scooping the pool, I suppose you would say. Another investor darling from South Australia, Whyalla. Let's add that to the mix and see if any of those fall in against Frankston, which is rating very well for the investment properties it's finding. There we go. I've added Whyalla to the mix, and we've got some investment candidates that are actually outperforming the Frankston candidates. What I'm demonstrating here is it's found some good investments in Frankston, not so much in Toorak at the moment based on the location and the valuation statistics. I added Whyalla into the mix, which is another investment class suburb in South Australia that's in vogue at the moment, and we've pulled out some great investment candidates that are comparing well to Frankston. So just say those are the 3 suburbs that you're trying to track. It's doing a really quick analysis of the properties that are currently on the market, comparing like for like, and only spitting out the cream of the crop for you to investigate using our suburb map. So you ask the question, where do you choose these suburbs? How do you select suburbs in the first place? There are a number of ways. We've got a suburb shortlisting feature, where here you can nominate your requirements, so the state, the property type that you're interested in, and the price range, and also the rental return between 6 and 10%. Based on those criteria, it will do a search and it will spit back the list of suburbs that fit those criteria. You can use that as then your research starting point, and you can launch into the suburb analysis for each of those suburbs. I'm just going through those quickly because there's a lot of content here. It's a whole nother webinar. Basically, with the subscription, I'm on hand with the 30-minute demonstration, any question and answers, obviously, but I'm also on hand with lots of tutorials, lots of FAQs, lots of help files, lots of emails. You're automatically on an email subscription list, which gives you daily gems of information that teach you how to use and powerful techniques in using these different tools. Another widget is a writer feed. I've teamed up with Terry Ryder for him to provide the suburb listings on a number of his different reports. So I've integrated the Boomtown reports and the Cheapies with Prospects reports from Terry. You can select on one of these reports. It will preload the suburbs that he recommends based on state, New South Wales, Victoria, any state that you like, and therefore you're loading the individual details for those suburbs. My apologies, I've just misclicked there, so I've just actually clicked on one of those suburbs that was loading. Each of these suburb widgets gives you some of the key information about that suburb, the price, number of homes for listing, number of amenities, number of Ripehouse investment zones. You can click through on any of these suburbs and be taken through to the main suburb analysis page. I am going through this quickly. I do apologise. There's just so much content here. It's a whole other webinar. So it's just basically a really nice tool, the dashboard, for you to come back every day to have as your launching pad into the more advanced analysis features of Ripehouse. And all the settings here are saved. You can configure, you can drag and drop. Each of these widgets can have different configurations and different settings. You can have multiple property feeds, all with different suburbs in the mix, and that's all ready for you to go every day. So that's the dashboard, and that's obviously as part of the subscription, the 3 monthly subscription. That's all open to you as on an unlimited basis, and you can check back. It's Australia wide. You can use any of these features anytime you need in those 3 months on an ongoing basis. So that's the full picture. I've demonstrated the suburb analysis pages and also the Ripehouse dashboard. I've talked about a lot of the Ripehouse features, but I've also talked about a lot of property investment concepts and theories, also meshing that in with different strategies that you potentially could be using and demonstrating how you can apply those strategies and really exploit those strategies using the Ripehouse tools. Ripehouse is really about saving you time and saving you money. It's allowing you to estimate value a lot more clearly, a lot more accurately, and with a lot more research and confidence to negotiate based on the facts with agents and secure the correct value for property, or even negotiate undervalued property. It's about saving you dollars both now on purchase and also into the future with excellent located properties that are always going to be in demand and always going to be appreciating with excellent capital gains returns based on their average in the suburb that's achievable. I've talked about these things and I've given our demonstration. Ripehouse is a subscription model, as you can see here on the slide. The subscription is $169 per quarter, which is the standard price. If someone walks in off the street, that you can subscribe to Ripehouse for that 3-month period. It allows unlimited access across Australia. I've actually noticed a question from one of our webinar users that is across the whole of Australia, and this is allowing you to use the suburb analysis screen and the Ripehouse dashboard, which is the daily shortlisting tool. You've obviously seen the slide here in front of you for a few minutes. The webinar offer that I'm offering today, if you subscribe within the next hour, 60 minutes from the end of this webinar, the offer is $135.90 for the quarterly subscription price. That's a great discount. in order to secure that it is in the next hour, I'm hoping you'll jump on, really hop into Ripehouse and get involved. I'm on standby basically to answer any questions at any time. I really like to communicate and talk with people about property, their strategies, and how Ripehouse can help. Really making sure that you're getting the most out of it. A demonstration there in the next 60 minutes is rewarding with a discounted subscription price. Plus, in this whole vein of being there to support you as your Ripehouse investment partner, I'm offering as part of this webinar, the viewers who are guests and taking the time to view the webinar and are serious about learning about property investment, a free 30-minute one-on-one personal screencast where I'm going to get some details from you before it starts about your specific requirements, your strategy, your background and investment strategy. Really, so the 30 minutes is jam-packed with how to use Ripehouse most effectively to leverage all the tools to find undervalued property, find property that really suits your criteria, your strategy, know the location, know the value, and really arm you with all the tools and research that you need to start negotiating and securing these properties. So that's my commitment. This is only available in the next 60 minutes, the discounted subscription and the free one-on-one personal screencast. So I really welcome you to jump on board. I really look forward to talking to you and becoming your Ripehouse investment partner. Lastly, I'd just like to say thank you. And as another bonus, I mentioned it right at the start of the webinar, I'd be delighted to offer you a bonus just for attending. Send us through, I've got an email here which is my personal Ripehouse email, I monitor this at all times. Send us through a comment about the webinar, the suburbs that you might be looking in, and I'll send you back a free customised report based on those suburbs, any property types or any particular strategy or asset classes you're interested in, mention in the email and I'll customise the report directly for your needs. It will have some great information about location in that suburb, pricing, quartile pricing, number of properties, average listing price, all the key KPIs you need to make key decisions for that suburb. It's a great report, it's some excellent information. I'm offering it to you free just for attending the webinar and as a thank you for attending. I might jump onto some questions now. I've been getting a few of them through, so let's get into that now. So I've obviously just switched the camera back on again. I know I promised I wouldn't, but I really just wanted to take the opportunity to really make a huge thank you to you all for attending the webinar today and taking the time out. I hope you have found it helpful and you've learned a lot and seen some interesting perspectives and different ways of looking at things. I get really passionate about property. I love seeing people use Ripehouse and I love to help people make good investments and find those hidden gems and obviously seeing that translate into dollar signs and savings and setting people up to be successful in property investment. Throughout the webinar there's been a few questions, so excuse me while I just sort of check out what people have been asking. There's been a few, so I might be only able to get to a couple or 3 or 4. I'll take the time to formulate my responses into written form and send out emails to everyone that attended for all the questions I answer now verbally and all the ones I miss out. So don't worry, I'll get to your question and send through all the responses. First question, for average net income, I'm assuming you mean the overlay. This is from Mike, by the way, so hi Mike. For average net income, the overlay is this figure quoted after tax or pre-tax. It's a pre-tax figure. It's the maximum personal income per person possible before superannuation or any taxes or deductions or medical insurances is deducted. So this is the maximum income that the person receives, the maximum net amount. Question 2, is the subscription amount for just one state? E.g., would I have to subscribe to Victoria and New South Wales data as 2 different subscriptions? No, this is, as I sort of touched on before, it's unlimited membership for the period that you subscribe for. You can cancel at any time in those 3-month blocks, and that applies to every suburb across Australia. So, you can Queensland to Tasmania, Northern Territory to South Australia. You can use this unlimited for every state, every suburb across Australia. Another question here. I want to be able to search all the properties on the market in a given area. Can I filter, say, postcode, suburb, radius around a given address? So you can obviously do the suburb search, and that's based on postcode, based on suburb. It highlights the local government area. You can't specifically search per postcode, but you can see the other suburbs within the local government area and quickly switch across to those. Yes, suburb is obviously covered. Radius is a great one. I've experimented in the past with removing and adding properties onto the map by drawing a polygon onto the map. It's a feature that I'm actually going to be rolling back out again. So you can draw a square across parts of the map and remove all properties from that section very quickly and easily. It is a feature that we're going to be adding again in the next couple of weeks. We are in development to reapply that based on our new technology. It makes things a lot easier. You can see, you can basically remove huge chunks of properties very quickly and see how that affects the quartile pricing for that suburb. So it's very powerful. As to your points around filtering, say, on postcode and distance around an address, probably what I would suggest to get around that problem and to solve that problem is when you're highlighting on the suburb next to a suburb in the same local government area, it does highlight that suburb in green, and you can quickly click on that and switch over to it. Then you can compare the properties for sale there, do all the same filters and overlays, and you can do a quick comparison of the two suburbs that way. Another question, this is probably going to have to be the final one before I wrap up. Can I view proximity from local post office to CBD post office? It's an awesome question, and at the moment, excuse me, it's an awesome question, and at the moment, no, you can't. I'm going to take that on board because I had to sort of make a comment about that. Even though the functionality is not there, that's great. You need to be able to put that suburb in context, how it sits within the wider city area. Is it 10 kilometres from the CBD? Is it 1 kilometre? That really would demonstrate how that suburb sits around with the suburbs next door. So it's an awesome question there, and currently no. I'll keep you all posted about how we will structure that into our next development cycle, because that's great. It's really helpful data, and I do believe we've got the capabilities and the data to be able to display that. So. Yeah, I've got some other questions here. I've been taking up a lot of your time. I will get those back to you on email. A reminder about the special offer. We're on hand to help all constantly. That's our job. We love to talk about property, and we love to talk about Ripehouse. So please, I'll just put a screen up in a minute with all my contact details, how to get in contact with me, my mobile phone number, email, Ripehouse support emails. We'll be on hand to reply at any time. And there'll be a button on that screen that you can click directly through to secure that price of $135.90 per quarter. That's the special price for attending the webinar, activated for another hour. And if you activate within that hour using that link, we will have the 30-minute one-on-one personal screencast with you, which it's me sitting down, looking at requirements, looking at how Ripehouse will best suit and answer your questions and your needs, personally guiding you through the usage of them, getting right into the nitty-gritty with you, and hopefully getting an amazing result for you where you can save dollars, you can secure an amazing investment which is going to help your future and really get you on that fast track to the next investment. Finally, once again, a huge thank you for attending. I really do appreciate your time today. And finally, happy investing.